And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA CIB. Discover the latest trends shaping digital assets across Africa. Download the ABSA Africa Digital Assets Insights 2025. Good evening. Welcome to the program. 9 minutes after 6. I'm Stephen Grootes. Good to see that our GDP is up slightly, but just to reiterate the point, we aren't even really treading water. If you look at the number of people in South Africa, the number of people coming out of the schooling system, through the education system, and into the jobs market, and you're growing at 0.5%, you're really going nowhere. And on the issue of population, an astonishing sort of claim from a company called Fiber Time, suggesting, and they're being very careful about how they put this. They're not saying, we believe this is the number. They're just saying, we believe the official number of people in South Africa, the population figures are wrong, and we believe it's much higher. How much higher? Could be as high as 95 million people, they said. Just to remind you, the official sort of figure is 61 million. And even that's contested. It seems to me, I understand that South Africa, and I realize South Africa can actually be quite a difficult country to understand. If you look at the sheer breadth of it, the different places, how far some parts of it are away from other parts, the diversity of it, all of those things. But 30 million people that we didn't know about, I find that hard to believe. That would mean, by the way, that there are probably 15 or 10 million people who would qualify for a social grant who aren't getting them. And if there's one thing that people will do quite a lot to get, to make sure they're on databases, it's to get a social grant. So I found that quite a strange claim to make. We're going to be very interested in how that develops. We will talk to Gulam Balam, the chief economist at Standard Bank, in a moment about the GDP figures. A big claim coming from the Competition Commission today. They say that they're referring a case against 8 cargo companies, international companies, to the Competition Tribunal, that they were engaged actually in sort of collusive behavior for a decade, all about shipping goods from Durban to Asia and from Durban to West Africa. We'll look a little bit more at changing money flows with Mark Swilling in terms of investing for the future, and that Marafe story, shutting 2 smelters. Professor Samson Mampwedi will be on your radio before 7 o'clock. He'll have some great insights into what actually is going on and how we got here. The electricity pricing situation at the moment is very complicated and very difficult. Good to hear from you tonight on 011 8830702 and 0214460567.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, I was listening to John Perlman on Radio 702 earlier, and I'd been watching some of the testimony today that had been made and given by Dr. Imogen Mashazi, the former city manager at Ekurhuleni, and she was testifying at the Madlanga Commission. And I'd been watching it, and you may have been paying some attention to it. And I've been kind of struck by, I suppose, the ineptitude, the incompetence displayed in her answers. Now, maybe it's just this incident or it's what she's testifying about. But towards the end, I've never seen an evidence leader essentially saying to someone, you can't bring evidence that you know to be a lie for your own agenda. It was extraordinary. But what really surprised me was what John said afterwards, and he made such an important point. He was saying that actually, if you look at her salary in the 2023-2024 financial year, it was 4.57 million rand. That's extraordinary. Why, and I understand, and this is a story that's been done before, why city managers get so much money. I do think you need someone who's very skilled, someone who's incredibly competent, someone who's well qualified, very well qualified. It's a big job. It's probably much harder, I would think, than being a JSE CEO. Let me put it like that. I think it's a very tough job. But then you look at the testimony and you just think to yourself, how did we get here? How did this happen? Because I'm sure she's got a doctorate, from what I understand. Certainly her title is doctor, and I presume it's not an honorary doctorate, because I don't think the commission would have called her doctor if it was an honorary doctorate. At some point, she would have come through school, she would have come through a tertiary education, and she would have been, on the face of it, glittering with promise. This would be someone you would look to as a future leader. And now, for it to end like this, So my question to you tonight is, what do you think happened to Dr. Imogen Mashazi that she ended up on the stand behaving in this particular way? Now, you may disagree with how she was behaving. Sure, I'd be very keen to hear that too. But what do you think went wrong from what I'm sure was immense promise as a younger person, like immense, to where she ended up today? How did this happen? Your voice notes, please, on 072 702 1702.
702. Stephen is on X.
At Stephen Grootes.
Well, the Competition Commission saying it's referring 8 shipping companies, including Maersk and the Mediterranean Shipping Company, to the Competition Tribunal. It says all 8 of these companies charged exactly the same amount to move cargo on routes from Shanghai, Ningbo, and Shekou to Durban, and from Durban to Hong Kong, and from Qingdao to Durban. Makgale Mohlala is the head of the Cartels division at the Competition Commission. Makgale, good evening. I do appreciate the time. What do you believe these companies were doing?
Good evening to you and good evening to the listeners. These companies have fixed prices of transporting cargo from Durban to ports in Asia. The one that you've mentioned, there's quite a number of them as well. So we have been investigating this matter for some time now. We have come to a point where we are satisfied that the evidence we have is enough for the Commission to secure conviction against these companies for price fixing.
Obviously, if they were charging the same price, you could probably prove that quite easily, and that's obviously suspicious. If I were you, I would investigate that too. But is there any other evidence? Do you know if there are any meetings or communications or any of the other kind of elements that would prove a sort of cartel? Was there some kind of arrangement between them?
Of course. I mean, we wouldn't refer it just even if there was no such kind of evidence in addition to the pricing. So we do have evidence. It's pleaded in the documents that we served them, the referral. So they now know what we have against them. We've put it out there for them to see it.
When did you first hear about this? Because as I understand it, they started doing it in 2008 and they stopped in 2018, 7 years ago. Did you know this was happening at the time?
Look, it's an old investigation. It's quite huge and complex. We started in 2016. We got a customer of theirs that approached us after they issued price increase letters bearing the same amount of increase, and after they refused to give that customer a discount, so the customer approached us. We initiated the investigation. And after the investigation, we conducted a dawn raid at Maersk, Hamburg, MSC, and CMA and PIL. We seized a lot of documents as well as electronic data. So we have been analyzing this. It's quite voluminous with the limited resources we have. So we managed to crack it. So we've now put it out there for them to respond.
I mean, I realize you have limited resources. I realize you have a lot on your plate. It's still finished 7 years ago. I mean, that's a long time.
Yeah, because it's simply not easy. You know, you can say, well, I'm not cracking it, I'm dropping the investigation, or I'm continuing because I'm getting glimpse of a problem here. I'm limited by resources, but I keep on going. So
Okay.
We've come to the end.
They stopped in 2018. Do you know why they stopped? Did they know by then that you were investigating, even though you had already known for 2 years?
Yeah, look, that's up to where the evidence put us. It's possible that they have not stopped, and as part of the prosecution, we're gonna get to that point where we go to for discovery, which is where they will have to give us everything they have, so we can make an assessment whether indeed they stopped in 2018 or they continued. Remember, it's quite lucrative, so
Sure.
and you are not there with them. You don't know if they really stopped or not.
Do you know and I know that you might have been in communication with other authorities in other jurisdictions. These are international. I mean, shipping companies are always international. Do you know if they might have been doing this in other places on other routes?
We don't know. We suspect they are international companies, but they also have South African subsidiaries that are based here. So the firms that we were really after are those South African subsidiaries. It's possible that they're doing it in other routes, in other jurisdictions, or maybe they applied for exemptions in other jurisdictions. You know, sometimes they decide which jurisdiction they want to respect and which one they don't want to respect. So those that they respect, they'll get exemption, and jurisdictions that they don't respect, they'll just do as if it is allowed. So we suspect that if they are doing it here, they are doing it somewhere else, but we don't know.
Makgale Mohlala, thank you very much indeed. Head of the Cartels Division at the Competition Commission. If you were shipping goods during that time on those 8 companies and you were shipping them from Durban to Asia, it'd be good to hear from you tonight on 011 8830702 and 0214460567.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
Confirmation today from Stats SA, our economy growing by just 0.5% from the beginning of July to the end of September. Obviously, the contribution from mining was up. Electricity services were down. Interestingly, gross capital fixed formation was up, meaning more money is being spent on infrastructure. Gulam Balam is the chief economist at Standard Bank. Gulam, good evening. Good to talk again. On the surface, 0.5% is quite a disappointing figure. But I imagine you and no one else really expected anything better.
Stephen, great to talk to you. The 0.5% was in fact consistent with consensus. So the forecasting community had predicted this outcome. So to that extent, it speaks to this idea that we cheer at the minimum 4 consecutive quarters of growth. And remember, the 0.5% is quarter on quarter. It isn't year-on-year growth. What it therefore alludes to is that the plausibility that for the whole of 2025, the economy could still muster roughly 1.1, maybe 1.2% annual growth. Now that's double the 0.5%. And I guess the last point of modest cheer is that the economy is neither contracting nor stagnating, but seems to be enjoying gentle ascendancy.
We seem to be seeing a bit more money being spent on infrastructure. So about a month ago, the Labour Force survey indicated that many more people are being employed in construction. We see from this figure, construction seems to have turned a corner. I mean, are those very weak signs of a kind of change?
Modest, but to the extent that in both 2024 and this year, at an annual level, what you call gross fixed capital formation, which is just an elaborate term for fixed investment, will have contracted in roughly 5% over the 2 years. However, this omen does signal that we could see growth in 2026 in the order of around 3.5%. So you're correct in suggesting that if we look at other guide stones, such as corporate credit growth and imports, and also investment by the public sector, it does augur somewhat favorably for 2026 relative to the last, let's say, 18 months to 2 years.
In so many ways, our economy has changed, and in so many ways it hasn't. I mean, it's because of strong platinum and gold prices, and then again because of our farmers, our economy is growing very slightly. And I mean, you could have said the same thing quite a long time ago.
So, yeah, every time we get to discuss the economy rightly, we talk about various industries, sectors, and then from the demand side, we talk about consumption, fixed investment, and government spending. Overarching all of this ultimately is confidence, and confidence does take cue from the politics. In some respects, the politics has been incrementally favorable, firstly. Secondly, we hear some good news in recent months, for example, the S&P upgrade. We've been relieved of the Financial Action Task Force list with regard to financial management, and we had a reasonably good medium-term budget. Now, we're obviously getting news surrounding the manner in which our criminal justice system seems to be captured, and the rule of law is being impugned. So that will somewhat temper confidence. But dare I say, incrementally, the direction of travel is favorable, and we hope the reform agenda out of Operation Vulindlela, as well as any incursions with regard to dealing with crime and organized crime particularly, will be constructive through 2026, so we can bake in a continued acceleration to, say, 2% growth by 2027.
You talk about the sort of high-level things that are going well. So, yes, S&P Global, I think there's possibly Moody's later in the week. To go from that high-level stuff to actually feeling a difference on the ground, does one automatically lead to the other? I would like to think the sort of small wave of good news that we've had over the last month does feed into the broader economy in some way.
So you would think that they dance together reasonably well. And I do think the statistics on the ground, as you suggest, speaks to that. So, for instance, inflation has been generally low at between 3 and 3.5%, while national wages in real terms will be about 3 percentage points higher than that. In other words, South Africans are going to experience positive real income growth, both as a function of, let me call it, sticky nominal wage settlements against fairly low inflation. Secondly, interest rates have declined by a cumulative percentage point. And in the nature of the transmission mechanism, this year's decline in interest rates will have its maximum effect in 2026 as people take advantage of that. As a positive omen, we see car sales at its highest nominal number or sales figures in years, just indicative of individuals willing to spend on credit, and also just easier credit conditions combined with an improvement in debt affordability. So on the ground, there's a semblance of more constructive consumer behavior, which could be a draw card for private investment in due course.
And over the longer term, a lower inflation target? I mean, I would like to think that brings down the cost of credit generally and has an impact, but it'll take a long time for us to feel that.
So, yes and no. No in the sense that the bond market, which is, of course, where corporates and government go to borrow, that has already raced down. So, you had a steady state bond 10-year interest rate of around, let's say, 11% a year ago, and now you're at around 9%. So there's already 2 percentage points, just generally speaking, of savings as a function of the Reserve Bank signaling that it will target 3% alongside the bank's historic credibility to deliver what it anticipates it will deliver. So in this respect, you've already had, let me say, established money, corporate money and government money enjoying the lower interest rate environment as a function surely of that promise. In due course, yes, consumers who borrow as what we say at the short end, in other words, prime interest rates, they too will enjoy over the medium term lower interest rates as a function of the possibility that the bank is able to guide inflation and make it sticky at around 3%. So some benefit already injected into the economy, and in due course, more to come, particularly for the household sector.
Gulam Balam, thanks so much, Chief Economist at Standard Bank. Really appreciate it. 27 minutes after 6.
The Money Show.
The Markets.
Anthony Modasani is a senior equity sales trader at Absa CIB. Anthony, good evening. GDP figures, I mean, things looking up, but very, very slightly, really?
Yeah, Stephen, thanks for having me. Sorry I couldn't join you because of this weather that we're having.
No, it's terrible weather out there, so best where you are.
Yeah, no, not the best of weather. But for GDP, maybe slightly a bit more sunny, right? I like to look at the positives. So, it's another positive print. The year-on-year came in, I think, better than what the economists were expecting. And, it seems consumption spending just continues to remain resilient. So that's pretty positive at this point. I think maybe just to, we've had a bout of good news, right? So if you think of us getting off the grey list, we've got the S&P ratings upgrade, we've got Moody's coming. Hopefully there's some more positive news. And the medium-term budget policy also went off without a hitch. So there's quite a lot of positive sentiment coming through, and hopefully that just gives us positive momentum into 2026.
F&B had an update out. I mean, essentially seemed to be F&B First Rand seems to be suggesting same. Pretty much kind of moving in the direction they want to. Certainly not really changing their guidance in any big way.
Yes, yeah. So look, it was a solid update. If anything, they're saying that they're looking to growth in non-interest revenues trending higher than in the previous year. So they're hitting all the right notes. I think the thing that maybe the market's still a little bit cautious about is just around the UK Motor Commission matter. They are taking it quite seriously. They've said that they've appointed senior legal advisors, including the King's Counsel and economic specialists, just to keep a hand on things and obviously just stay on top of the matter. They haven't made any additional provisions for this UK Commission matter, Motor Commission matter. But yeah, I think all in all, from the number side of things, pretty solid, looking good for full year.
And Exxaro, they had a pre-close statement. They're not expecting to improve their coal volumes.
No, so I mean, it also felt like it was sort of an inline sort of a statement. They spoke about the Transrate freight rail topping 46.8 million tons at Richards Bay Coal Terminal. So that sort of read quite nicely. They said that total sales are expected to sort of be in line with full year 24 volumes. I think that maybe the market was a bit disappointed about. From a trading activity perspective, you saw the stock fall as much as 5% at one point, but then bargain hunters came in. It ended down slightly softer, down 1.7%. But yeah, it wasn't anything overly exciting. They've communicated pretty well to the market with regards to the manganese acquisition, the ferroalloys transactions, that kind of stuff. So market knew a lot of what to expect. No surprises.
Anthony Modasani, thanks so much. Senior equity sales trader at Absa CIB, bringing the time to 6:30.
WhatsApp Stephen
on 072
702
1702.
22 minutes to 7. So I asked the question, what happened with Dr. Imogen Mashazi? Someone who clearly has qualifications, at some point must have had huge promise. I mean, literally glittering with promise, and ended up today on the stand at the Makgale Commission in just the most bizarre way, really just not performing well. Where did it all go wrong? How did she end up as the city manager at Ekurhuleni, obviously appointed, I presume, in a kind of normal, formal manner, and yet here she was on the stand? What happened? Your responses?
Good afternoon, this is Tabogai Midrand. Regarding Dr. Mashazi, I just think she was in a position she wasn't competent. I think that is a problem. The way she responds to things, the way she just pushes everything away from her. She doesn't look at documents, she doesn't make decisions. Decisions come from somewhere else, you just communicate. I think she was thrown into the deep end. Thank you.
Hi, Stephen. How are you? What got her to the point where she is now is greed and catered deployment. That's the problem. She is so pompous and thinks she's untouchable. You can see she's got no respect. Imagine working under her and she's just gloating there, sitting on her chair and just, like a queen that's got no heart for her subordinates.
Sure. Very interesting way of looking at it. Okay, yeah. I just find it interesting. What happens to people, when you end up in a commission like this? What must have gone wrong, for you to end up in this kind of place? And I've watched it happen so many times. People I mean, Brian Molefe is maybe the best possible example. Young guy who had everything. And look where it all ended. 20 minutes to 7.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
7:15 the time. Well, last week on The Money Show, you may remember hearing from Professor Mark Swilling. He suggested that while the amount of money we need to invest in our infrastructure is huge, South Africa does have the money, but capital flows to the wrong places. Today, the National Planning Commission, of which he is a part, releasing its report on this issue. It suggests the way that money flows at the moment produces profits for some people, but does not produce the levels of investment that we need. Well, Professor Mark Swilling, Commissioner of the National Planning Commission, is on the line to us now. Mark, good evening. Thanks for your time. There's a huge amount of capital that is invested in South Africa in all sorts of ways. How would you redirect those capital flows? Where would the money have to go?
Well, primarily, we need much greater levels of investment in what economists call gross fixed capital formation. It's a fancy term to refer to infrastructure on the one hand, public infrastructure in particular, and productive assets on the other, more in the private sector. This combination of, if you like, hard stuff, actual assets, is what is gross fixed capital formation. And it's absolutely critical if you want to grow an economy. And it's been declining substantially since 2008. The National Planning Commission said we need a target of investment in gross fixed capital formation equal to 30% of GDP. We've never gone above 20%, and we're now below 15%. So that's the answer to your question. We need a lot more capital going into gross fixed capital formation.
At the moment, that capital is controlled by lots of different people. It's not coordinated. How would you change the flow? I mean, is it possible to actually redirect it in the constructive way you describe?
Well, you can't do it in a centralized, state-centric kind of way. There's nobody... there's no central power or coordinating mechanism when it comes to the architecture of a financial system. It's much more of a complex adaptive system with multiple dynamics, as you say, and multiple institutions. So what matters is the relationships between the most important, what in finance is referred to as balance sheets. So every household has a balance sheet, every company has a balance sheet, every major bank has a balance sheet, and all these balance sheets are linked together. Everybody's asset is somebody else's liability, and vice versa. So actually what we need to do is more incremental, more piecemeal adjustments to these relationships. To give one example, the Development Bank has set up something called the Infrastructure Fund, and the aim is to take 100 billion from the fiscus in order to leverage 900 billion from the institutional investors to create an infrastructure fund of 1 trillion. That's an example of where you're using the balance sheet of the state, the balance sheet of institutional investors, the balance sheet of a development finance institution to redirect the flow of money. Another example is what happened on our rooftops. 7 gigs of rooftops, well over 100 billion, without a single plan, as everybody tried to avoid load shedding. But it unlocked investment in a whole bunch of very valuable fixed assets.
I mean, one of the key things is that those fixed assets remained the property of the people who had invested in them. When you're talking about bridges, just to use a simple example, bridges can't be owned by individuals. A highway bridge needs to be owned by the state. It's a public good. And yes. I presume you'd need to do two things. One, you'd need to make sure that people have trust in the state yes. to manage their money. And the second is you'd yes. need to incentivize them, which means there needs to be a return.
Exactly. So a better example, which is very current, is the independent transmission projects, which the National Transmission Company and the IPP office have made available for private sector participation. So there's going to be a call for proposals to say, here are 7 projects, roughly 10 billion rands worth. Submit your proposals on how you're going to be involved. And once those assets get built, they are owned by the private sector. But the National Transmission Company then pays them a monthly fee for those transformers and those power lines to be made available for the transmission grid. And so you make a return, but what the private sector wants is guarantees. To say, well, we're not quite sure whether we can trust Eskom or the National Transmission Company. So what guarantees can you give us to make sure that if anything goes wrong, we'll get our money back?
We have a few development finance institutions at the moment. So there's the Industrial Development Bank, the Development Bank of Southern Africa, the Land and Agricultural Development Bank. Would they change as well as part of this? I mean, could they be enhanced in some way to do this?
Yeah, I think, one of the problematic, even sad situation with regard to our development finance institutions is they're very small. So the top four, there are many, but the top 14 only equals 300 billion on their balance sheets. Compare that to the commercial banks, which is 6.7 trillion. So DFIs are actually a fraction of the size of banks, insurance companies, pension funds, etc. And that shouldn't be in a country like ours. They need to have you need to stretch those balance sheets and so that the DFIs can play a much more significant role as the orchestrator, the lead arranger of the kinds of deals that we need. And the way to do that would be to move them under the same prudential authority as the banks and other financial institutions, which is the South African Reserve Bank and the Prudential Authority. So if they were regulated the same way as all the other financial institutions, they would be trusted more and would be able to access more South African rands on the deep South African capital markets. So that's one of the recommendations that we make. Maybe not all the DFIs, but certainly the IDC and the DVSA would benefit enormously from that kind of balance sheet restructuring.
Professor Mark Swilling, thank you so much. Commissioner of the National Planning Commission.
The Money Show, Stephen Grootes, is brought to you by Absa CIB. Discover the latest trends shaping digital assets across Africa. Download the Absa Africa Digital Assets Insights 2025.
6 minutes to 7. You would have heard the announcement from Rafe Resources today. They're closing 2 smelters. They say they just can't get cheaper electricity for them from Eskom. Meanwhile, Eskom's chief financial officer, Kilib Kassim, confirmed to us on the Money Show on Friday, one of the reasons they sold less electricity in the 6 months to the end of September was because so many smelters have closed, because power prices are so high. Professor Samson Mampwedi is the head of the Energy Secretariat at the South African National Energy Development Institute. Samson, good to talk to you again. It's been a while. There's a combination of reasons as to why these smelters are closing, but high power prices are obviously the biggest factor. Is it always going to be uneconomical to run a smelter in South Africa?
Yeah, good evening to you, Stephen, and the listeners. So the prices of electricity have gone up by more than 900% between 2008 and now. The smelters use quite a lot of electricity. You're looking at an average of about 4 megawatt hours per ton of the metals that are produced. And that is the major input into their production. And if you look at the current situation, the biggest issue is competing globally with other smelters. For instance, China has offered their smelters a very low electricity price to attract them so that they can go and do their smelting business in China, so that then they can create jobs in China. So the price of electricity is quite a big factor in the as part of the input. In the South African situation, I understand the struggle that Eskom has in terms of offering low prices, because their cost of electricity production has not been cost reflective. However, I think renewable energy can play a very big role in this particular space, given, of course, the fact that if we have enough grid capacity in the country to be able to transmit the electricity produced from renewable energy, that can be ring-fenced for the smelters, and the smelters can also procure directly from IPPs. But there are other challenges, like your wheeling challenges, because of the lack of the grid capacity.
I mean, one of the consequences of this is that Eskom is selling electricity. I mean, the other reason is people are using solar power if they can. But if Eskom is selling less electricity, don't they become more unsustainable more quickly? I can't imagine, on the current trends, that the volume of electricity Eskom sells will ever go up again unless something changes quite dramatically. It will only go down from here.
That is correct. So if you look at the smelters and the amount of electricity that they consume, and added to that is the fact that they are a paying customer. And if you look at the economics of scale, Eskom should be able to offer them slightly lower tariffs because their volumes are quite high and they are a paying customer. So if they allow these smelters to close down, then they are losing one of their biggest customers that pays them. There are other big customers, municipalities that are owing Eskom close to 100 billion rands. They are not a reliable customer as things stand. So Eskom cannot afford to let the smelters close down at this rate.
Is there any kind of policy intervention that can be made here? And I know, maybe NERSA or someone would be able to say, well, Eskom, you have to give the smelters lower power prices, but that means you and I pay more when we use Eskom electricity, and all it'll do is push people away from the grid more quickly.
Yeah, there are policy adjustments that Minister has been working on, Minister Ramokgopa, and those policy adjustments have been approved by Cabinet. And following those policy adjustments, there were offers that were made by Eskom to some of the smelters. For instance, the Glencore Bushhook ferrochrome smelter. They've been engaging with them because they had a closed down date of about 8th of December. We are watching closely those discussions between Eskom and these smelters. And this is the biggest smelter, the Bushhook one, where if they close down, you're looking at job losses upward of 2,000 people that may lose their jobs. They produce about 2.3 million tons of this ferrochrome, which is a third of South Africa's export. So this is something that we're watching closely, something that we don't want to see happening, because already in the sector we've lost close to 400, between 300 and 400,000 jobs. So this is something that the minister already got support from Cabinet, and hopefully those discussions go on very well.
Professor Samson Mampwedi, thank you very much indeed. Head of the Energy Secretariat at the SA National Energy Development Institute. We'll talk about unlocking the gaming economy in South Africa in a moment. It's just gone 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa CIB. Discover the latest trends shaping digital assets across Africa. Download the Absa Africa Digital Assets Insights 2025. I'm Stephen Grootes, 8 minutes after 7 the time. We'll speak to Rotendo Ndingwi in a couple of moments. He'll have the latest for you from our continent. Tato Maroka from Leaders in Motion Academy already on hold. We talk the future of digital media. Just getting into the gaming economy, if you grow up in South Africa, I think has got to be quite a tough thing. You need to grow up immersed in it, and it's unlikely that you get the chance to do that here. And then looking forward to sort of preparing for December, how to make sure that January is actually fine. Thabo Holo is from Old Mutual Financial Education. Thabo will be with you from 7:30. I think that's going to be an important conversation. Any plans you're making for December? You're going home, you're going on holiday, whatever it is, you might want to just listen to that. And when we're done with it, by the way, send the podcast to friends and family. You might find plenty of people who actually do need to hear from it.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app
and DSTV channel 856.
About once a week, you'll hear a conversation on The Money Show about cars and Chinese cars. I don't quite like the word flood, but that's the word that you'll hear. They're flooding the market, that these cars are coming in, they're undercutting, and they're having all sorts of impacts. They're having an impact on budget, on Avis budget, for goodness sake. They're having an impact in lots of different ways. They're having a big impact, it seems, on we buy cars. And Reuters has a big story today about how non-electric cars, so fossil fuel cars, let's just be clear, petrol and diesel cars, how many are coming out of China and being sold in other markets, and particularly in the emerging markets, which is where we are. Here's the number that just staggered me. In 2020, according to Reuters, China exported 1 million petrol and diesel cars. Okay? This year, it's 6.5 million. Now, we have a car industry we want to protect. We wanted to employ people. We wanted to do all sorts of things for us. It creates other industries. But how do you compete with that? And they're getting more money for it in an emerging market than they are in China. Now, why, do you ask? Good question. I'm glad you asked that. It's because the Chinese government has been subsidizing electric vehicle manufacturers to the point where there are so many of them that many of them are now having to close. They've got too much capacity. And so no one in China is buying a diesel or petrol car. They're buying an electric car because they've become so cheap because there's so many, which means that all the Chinese manufacturers who still have these cars have to sell them somewhere, and they get more for them in South Africa than they do in China. 1 million cars in 2020, 6.5 million in 2025. The number is just astonishing. Your views, 072 702 1702.
702 with Stephen Grootes.
Email him on stephen@702.co.za.
I'm going to ask you a personal question. How much time do you spend on your phone looking at digital content? And I don't just mean YouTube. That's kind of very early 21st century. I'm talking about games. I'm talking about all of the other stuff that you see that's actually been made. A lot of it's animated now. And I sometimes wonder how hard it is for us in South Africa to actually get a piece of it. Tato Moroka is the CEO and founder of Leaders in Motion Academy. Tato, good evening. We know this market is massive. How difficult is it for us, South Africans, to get a piece of it?
A very good evening to you, Stephen, and the listeners. Again, thank you for having me on the show. I think one of the things we wanted to maybe look at is that at the global level, the creative industries is around $3 trillion, right? And then if you look at gaming from an African perspective, we are the second biggest consumers of games, together with the Middle East. And that then cuts across your animation, cuts across your digital content creation and films. But yet Africa, we're so rich with assets of creativity and storytelling. But there seems to be this struggle from why we're not able to scale. I mean, earlier, as we were talking about just where, government has subsidized Chinese cars and they're now exporting in high numbers. We're struggling to export our creative stories at a high level. And one of the things that we've been, seeking to kind of really, really delve into is how do we create an appetite for investments, whether in South Africa, in Africa, or globally, to start driving into the South African market so that we can see more investments going into the space of films, games, animation, because it's all interconnected, from studios that are required to be built. And I mean, one of the biggest problem statements, even just within gaming, is that you've got over 252, studios. But out of those 252, you've got about 6 companies that are generating real revenue. And some of these smaller gaming studios are struggling to pivot. So the question has to be, what is it that we need to do from a South African government, from private sector, to start really rethinking how we can start to re-diversify even our economy? Because currently the creative sector contributes 2 to 3% to our GDP. And I think that's very little. So one of the things, even from a Lima perspective, that's what we've been trying to solve for in the past 7 years. And I think we one step closer.
So, I mean, on one level, this is a bit like you don't need a huge amount of investment to make a lot of money, right? I mean, that's the joy of it. It's all about the intellectual capital. And obviously, if you look at, say, Amapiano, which is doing so well in markets that are completely different to South Africa, you think, okay, Amapiano is not immediately accessible to someone in LA, but clearly they're getting it. So then surely the games content and the animation content should be accessible to them too, and therefore there's a market. I mean, to put it another way, clearly we can do it.
I mean, we generally need to start maybe rethinking our talent development plan, right? Introduction of your gaming, digital content, animation, from high school level or even primary school level. I think that would be a start. And I think once then, these youngsters graduate or, matriculate, then at least we've kind of like set them into these careers, because the creative sector, mostly from a South African perspective, if you talk to many creatives, parents don't see it as a viable industry. And also the high costs, which is also an issue of access. To study, for an example, film at a TUT can cost, 140,000 just on tuition fees.
Sure.
So that, again, could be a barrier to where young people who are highly talented, are having to think about bread and butter issues. So how do we integrate the LSMs from rural, township, urban, bring them together and start like a talent developmental program, which is what we do from a Lima point of view. And then from there, we pivot them into the business incubation, because the business side is also something that is quite critical. Because many creators, I'm a creative myself, having grown up, just wanting to use just my talent, but not understanding how to package my, my product so that it's palatable to an investor. And to your point is that we don't need big investments, but we do need some form of investments. And one of the big conversations that's happening with the Department of Small Business is that they're looking at even establishing a creative sector fund. And I think when that fund is set up, are we even ready as an industry to take advantage of that particular fund to start expanding our businesses so that we can see more jobs being created, creating more stability into the sector, getting more of our African games being bought. I was at Gamescom last year, and I looked at, there's about 350,000 attendees. And probably from Africa, I probably saw maybe about like 40 exhibitors.
Isn't there another issue though? If you are in the gaming industry, you grew up immersed in it, and that came with certain things. Fiber wherever you went. The best phones as they came off the line. Now, of course, AI. And very few, there are South Africans growing up like that, but very few. And isn't that one of the problems? Our digital, the things we need to create a proper digital ecosystem aren't necessarily there.
No, you're absolutely right, Stephen. I remember listening to, I think it is a CEO of, one of the broadcasters. And he said that, there was a study that fiber, connectivity might take us 20 to 30 years.
Yeah.
So that alone then just tells you that the digital gap is just going to continuously grow. But yet we want to compete at a global level. But also, we can't take away from some of the challenges of corruption in government, some of the policy issues, which some of them are outdated. We're hoping now that the G20 has come to South Africa, we'll start to see maybe some things pivoting a bit more quicker. We need to see more organized labor from the creative sector also happening. One of the things also that we saw, and, we collaborated with Henley Business School, which has a global presence, and we were quite intentional also to do that from a Lima point of view, is to say, how do we get global conversations happening here at home, and how do we get business schools to be more connected to the sector? And one of the things we then also thought to do was, we launched the Creative Universe, and part of the things that we did last week was we invited different stakeholders from funders, policymakers coming together and said we need to pave a 3-year plan. And this 3-year plan would involve radio, television, because that's where the awareness needs to happen. And then we need to then identify companies within these spaces of creative sector, then look at this creative industry fund, bring that in, and then from there look into which products will then be ready. Then do these market ready export initiatives and really be more intentional about that. We saw the Department of Small Business doing their first immersion for gaming, for an example. We were part of the 15 companies that went to Germany. And there's another one that's happening to Barcelona. But how do we ensure that also private sector companies who utilize these services in gaming, for an example, virtual reality is one of them, from an advertising space. And creative sectors are at 120 billion currently. And I think we're still not shooting above our weight. How do we get these big broadcasters also to play an important role?
Tato Moroka, thanks very much indeed, CEO and founder of Leaders in Motion Academy.
The Money Show, Africa Business Focus.
Well, Dr. Rotendo Ndingwi is the founding director at Tribe Africa Advisory. How's it, Rotendo? Good to chat again. The DevKey Group, they've inaugurated a big steel plant in Uganda.
Good evening, Stephen. Good evening to your listeners. Yes, so Naranda Ravel, Stephen, who's actually the billionaire from Kenya. And it's always good to hear the great entrepreneurial stories of Africans making a big move. We've heard with Dangote, we've heard with Masiwa. So a Kenyan billionaire, he's invested about $550 million into a steel manufacturing plant, which will create about 20,000 jobs. The focus is on Uganda, Stephen, but he's also expanded quite extensively into Rwanda through a Simwera arm of his business. So quite a significant impact. And the reason he's doing this, obviously, is to promote industrialization. We know with Africa, since 2005 to 2025, industrialization has more or less quadrupled according to the AFDB. So this is quite a great initiative. And they're trying to reduce the plus or minus $500 million worth of steel imports that they do. So this is quite a significant initiative, Stephen. And as I said, they're also expanding into Rwanda and as well as the other East African countries. So for the region and for the continent, a great story to follow.
Nigeria and its tech founders. I mean, you really want to, if you want to invest in something, Nigerian fintech's a good place to start. And yet they aren't listing on the stock exchange there. I mean, why is that?
Interesting report, Stephen, because Nigeria in 2024, according to the Partech report, Stephen, received about $520 million worth of VC funding for tech startups, and obviously their primary focus is fintech. Africa probably receives about $1.3 million every year in the fintech space. So the challenge is here is that you've got all these startups, fintech startups, but only 53%. More than 53% are actually unaware on how to list. 21% say that they would not list, and 46% are happy to sell off. The big challenge, Stephen, is the capability is there, the innovation is there, the technology is there, but just in terms of the ecosystem and the support mechanism to get them to scale up, which is a big problem in Africa. It's the same thing in Nigeria. Some of them also fear scrutiny because obviously accountability. Stephen, some time ago on the same show, Stephen, we talked about cryptocurrencies and how the uptake in Nigeria of cryptocurrencies was on the high, whilst the investment in the capital markets was low. And it was more or less for the same reasons. It's easier. The regulatory framework is a bit more lax. It's easier for them to transition into the cryptocurrency market as opposed to the traditional framework. So on one side, it highlights the great opportunity for fintechs to grow and glow in the Nigerian market, but the challenge of scale is quite significant. One of the key things hindering the growth on the market of fintechs in terms of scaling up, Stephen.
And then Uganda's got a big ethanol industry. They have a Biofuels Act. How important has that been to growing that industry?
Again, shows the diversity of what Uganda is doing. I mean, they've obviously got President Museveni, which is a story for another day. We won't get into the politics there. But in 2020, they actually had a Biofuel Act, and its main focus was to reduce the carbon footprint. Uganda per annum, Stephen, imports about 2.5 billion liters of petroleum produce, and they spend about $2 billion in terms of doing this. So the whole idea is to create an incentive that allows them to get to focus in terms of utilizing their local manufactured ethanol and blending it with the petroleum products that are coming. It also allows them to not only integrate with the region, but also from a continent perspective. But again, Stephen, I think these are strategic moves that if they do work out, and obviously the money trickles down to the rest of the economy, they can actually stimulate not only the country, but the East African region and to a large extent Africa. So another good story to follow with regards to clean fuel, sustainability, and growth, because obviously people are employed to accommodate this manufacturing growth in the region.
And then looking at Africa's 30 most attractive cities, basically places in Africa you want to live. Some very interesting sort of responses. I noticed Cape Town is one of them, obviously.
I think you've got a soft spot for Cape Town, Stephen. But Cape Town last year was actually number one. This year, it went to Cairo, followed by Kigali, then Nairobi, and then Casablanca. It's the Africa Report survey. And what I like about this analysis and report, Stephen, the criteria that they use, it's not just about the tourism market in terms of the highlights of the Table Mountain or Victoria Falls for Zimbabwe, but 4 key criteria. They look at the quality of life, they look at infrastructure and housing, business and jobs, and essential services, and they bring all these together. Johannesburg and Pretoria still in the top 10 is Lagos. And for number 10, Stephen, I don't know if you've ever heard of it. Number 10 is a city called Tangier. And I'll test your trivia of Africa.
Tangier.
I wasn't too familiar with
Yeah.
Tangier, Tangier. I think
Morocco.
I believe it's in Morocco.
Yes.
Yeah, in Morocco. Well done. 10 out of 10, Stephen. Well done. But again, I think the key thing here, the focus is really just to say, if you look at this framework of the measuring scale, they're looking and saying one of the key drivers of measuring success, and the highlights is FDI coming into those countries that correlates to government policy, supporting the ecosystem and the growth of the economies in terms of the different sectors. So a good analysis, and it'll be good to see who's number one next year and is going to compete with Cairo for number one. But I think those rankings are reality in terms of where these continents, countries are, cities are in the different countries they're in.
Dr. Otendo Ndingwi, thanks so much. Founding Director at Tribe Africa Advisory, and of course, looking at what's happening on our continent. 28 minutes after 7.
The Money Show. Personal finance.
23 minutes now to 8 the time. Well, I'm sure you probably remember where you were the first time you heard a Christmas song in a shopping mall this year, or the first time you heard it on the radio, or whatever it was. I'm sure it would have been John Matham. But the first time you actually heard music that said it was December. I'm pleased to tell you that on the Money Show will be the first time you hear the word January ahead of 2027, 2026 even, because that's just how we roll on the Money Show. So tonight in Personal Finance this evening, we're talking about how you can enjoy December without the worry of January. As you can tell, Warren Ingram is not with us tonight. Thabo Holo is the Program Manager for Old Mutual Financial Education. Thabo, good evening. Thanks so much for agreeing to do this today.
Good evening, Stephen, and thanks for the opportunity.
So, I mean, this is one of those conversations you kind of have to have, right? And I hear so many people complaining. I've been in March and people are saying this is the longest January I've had. Is it just anecdotal? Are we just being silly? Or do you actually have hard data? Are there hard numbers that show it really is a tough month? I'll tell you this, Thabo, it does feel tough.
Well, at the risk of sounding like a Grinch, we certainly don't want to dampen people's enthusiasm around the festive season. But yes, there's definitely evidence that shows us that it's an elevated spend during the festive season. Starting with now, it's no longer just Black Friday. It's actually the entire November now. So we see a whole lot of spend going into November, which unfortunately puts a bit of a pressure around January, because whatever we're doing now, if we're not properly planned for it, we'll certainly feel it in January. So most certainly, Stephen, there are numbers that support the fact that around November, around December, certainly there's elevated spend. And you can see even in township economies, even in the township retail sector, they pick up for around about 50 between 50 and 70% of sales that comparatively are higher than the previous month. So yes, definitely we are spending a lot around November towards the first weeks of December.
And this is it's not like we planned for it. We haven't spent the rest of the year building up a pot. I mean, maybe we've used a stockfell, but a lot of it is spending that it's not saved. I mean, we borrow, we do all sorts of things, but it's not money that we've necessarily planned to save, to spend.
I think that's the sad part, Stephen. And yes, perhaps for those that are fortunate enough to start in January and put a bit of a kitty aside as part of the stockfell, or those that save as individuals, perhaps the situation is different. But unfortunately, to the majority of us, and I'm saying the majority of South Africans, because that's exactly what we're seeing in terms of the numbers, we spend the money that we did not save. And yes, we dip into debt, unfortunately, a lot around this time. Even in an instance where we saved quite a bit, for January, for school holidays and stuff like for school openings. We dip into those savings even in November and December, which put us under pressure come January. So yes, unfortunately, the bulk of us South Africans, we are not particularly a nation of savers. So we tend to rely a lot of conspicuous consumption using, unfortunately, debt, and particularly around this time.
What kind of expenses? So in December and January, there's other expenses. There's back to school, there's school fees. There's also payments to people who might work for you. You want to give them an extra bonus if you can. There are also other issues, family members, things like that. What kind of expenses get, I suppose, compromised? I mean, if you spend all of your savings in November, and it's amazing how early we spend it now, what kind of gets lost?
Certainly, we actually start depleting even the basics. The other day, I was talking to Africa about the people that are not paying their rental. And sure. Yes, you do see a whole lot of people skipping their rent around the end of December, January, just to make sure that they have a festive season. Yes, we put pressure on the basics. I work for an insurance company, and we certainly do suffer, unfortunately, during this period where people overextend themselves and spread themselves very thin. And suddenly you see a reversal of debit orders. You see people skipping rent and some basics. And that spreads over, unfortunately, into January. So things like fuel going to work and transport money start to get affected simply because of our high expenditure around November, December.
Sure. We're speaking to Thabo Holo. He's the program manager for Old Mutual Financial Education tonight on The Money Show. How to survive December, how to ensure that you actually survive January. It's basically about making sure that you save correctly, that you don't spend it all. Your calls for Thabo, 011-883-0702, 021-446-0567, and voice notes on 072-702-1702. You talk, Thabo, about a blind spot. What is a blind spot during the festive season? The festive season blind spot.
It's a certain type of behavior, Stephen. For some reason, we have this. It's called FOMO, fear of missing out. That we don't particularly plan well. As a result, we get ourselves caught in things that we did not plan for. And the blind spot are those expenses that you did not plan for, that you engage in. Whether it's an activity, whether it's some piece of furniture that you just seen and you haven't planned for it. And because you just want to be part of that festive mood, that festive mode, if you want to call it that, then we get caught in those blind spots, unfortunately. But mainly it's around the fear of missing out, and it's a behavioral thing that we, for instance, see in and around the festive time.
How can you, I mean, it's so easy to fall prey to that. I mean, to just be out and someone says, let's do this, let's do that. How do you manage it? I mean, is there you need a discipline on the spot, really?
Pause and reflect. So there you are, in that queue, you're carrying this thing that you did not plan for. Just pause for a moment and ask yourself a bit of questions. Is it something that you absolutely need at that particular moment? Is it something that you cannot do without, and you absolutely have to whip out that store card and buy this one thing? So pause and reflect. Is it something that is easily substitutable? Is it something that I can perhaps buy something else for the same kind of money? So pause and ask yourself all those kind of questions. What else am I willing to sacrifice? What else am I willing to forego just to buy this one thing? Think about a month or two that's coming. What are you willing to give up in a month to get this one thing? So if you were to ask me, I would advise just take a pause, just reflect, and ask yourself a few questions. And if it's online, don't press that check out button yet. Just take your walk a little bit and perhaps come back and say, hey, perhaps I need to think about this a bit. So keep it in that cart for a moment. Go think about it and just ask yourself, is it something that can that absolutely needs to happen now? And if it's not, take that brave decision to say, look, I'll see this. Maybe I need to plan for it. Maybe I need to budget for it. Maybe I need to save for it, and you will still find it. So my advice is pause, and reflect.
Is it a good idea to leave the situation you're in? So if you're on a screen and you're about to press purchase, actually go and walk away from the screen. If you're in a shop and you're about to buy something or about to sign yourself up for something, walk away. Go for a quick walk. I mean, I really do mean changing where you are physically and come back.
Absolutely. Nothing beats that. Just walk away. Just take a walk. Go grab a glass of water, take a walk somewhere. Go into your garden and just think about it. Give yourself a moment. Particularly if you're online, move away from the screen. Move away from the screen. Pause a little bit. Walk away. Walk around. Do something else, and see if you absolutely are still drawn to that, right? And in cases where you are physically in an environment, you are at that mall at that particular time, walk away. See other things. Take a walk. And then if it's absolutely necessary and you've thought about this and you've planned for it, by all means, look, I'm in the financial services sector. I'm not saying people should not spend, right? But then take that moment to reflect and walk away and think about it, then walk back.
You can see something that looks like the deal of the year, right? You can see something you think, if I do that, I'll be able to do something I never thought I'd be able to do. But you've warned it also can become the debt of the year. What do you mean?
That's the thing. That discount, that looks like the most beautiful thing that you've seen. Unfortunately, if you go into debt for that, that's going to take you a little bit of a while before you repay that. So something that is impulsive that you would have gone into now, unfortunately, the consequence might be longer than that particular moment. So if you think about it, it might look like a deal of a moment, but that might be a long-term debt that you have to, and believe me, you have to sacrifice something else. There's something else somewhere along the lines that you have to forego to repay that amount. And particularly if it's an experience, if it's something that you're just going to have a meal and you whipped out that credit card, you've whipped out that store card to buy a happy drink, and after the moment the happy drink is gone, the debt is still there. The credit card debt for that meal will still remain with you, and at some point you'll have to forego something to repay that amount that you used in that store card, in that credit card, for that happy drink, for that happy meal, for that once-off experience. And unfortunately, yes, we do see those kind of behaviors. And the ideal thing is to, again, if it's not planned for, rather you leave it alone.
I mean, how long can it take a household to recover that lost financial ground? You make a decision in a second, you know. You press the button and there it is. How long can it take you to recover?
Anything between 6 and 12 months.
Sheesh.
Depending on what kind of debt you take him for it. So yes, it looks like nothing up until you calculate the cost of that one decision over. Remember, this products don't come cheap, right? The cost of that, it might have been $100 at that particular moment that you've used to buy that happy drink, but the recovery will be 6, 7, in some instances up to a 12 months, depending on what you have bought. But yes, it does come at a cost, and it does come at great sacrifice because you're dipping into your future, right? To repay whatever decision, instantaneous and in most instances, impulsive decisions that we make now are the ones that are going to cost us over the long run.
We're speaking to Thabo Holo, the Program Manager for Old Mutual Financial Education, how to survive December so that you can actually survive January as well. That's what we're talking about tonight. I'm so struck by how spending has moved from kind of December to November, and only because of marketing, only because of Black Friday. Like, it never happened before. I made the point on Friday that the biggest shopping day of the year used to be Christmas Eve, then the Saturday before Christmas, and I think before that would probably have been the sort of 16th, that public holiday. But now it's November, and isn't that fascinating? All because of marketing. We'll continue the conversation with Thabo. Your questions for him as well on 011 883 0702 and 021 446 0567. It's 10 minutes to 7.
The Money Show, Stephen Grootes, is brought to you by Absa CIB. Discover the latest trends shaping digital assets across Africa. Download the Absa Africa Digital Assets Insights 2025.
The Money Show.
Personal finance.
Thabo Holo is the program manager for Old Mutual Financial Education for Warren Ingram tonight. We're talking, of course, about how you survive December, how you make sure that you're actually able to survive January as a result of surviving December. It's all about what you spend, and we're really talking about November, I suppose. Thabo, there's an issue here around discipline on the one side and impulse on the other. And if you want to be financially free, you want enough money, you actually need to have consistent choices. That's really the secret to it, isn't it?
That's the secret to it. Consistent, prudent choices. For some of us who are not that disciplined, but have the fortune of working for companies that can automate your savings, that's one way, right? Is talk to your company, put money aside in a disciplined way, and it's all about the discipline. It's all about the consistency, Stephen. It's not about the money. So start small. Start with what you can. Put it aside and have that clear goal in terms of where you want your money to go to. And that's exactly what it starts with. So instead of just being impulsive, at least set those goals. You know exactly what you're trying to achieve this year, whether it's going to school, whether it's buying some nice shoes in November. Start now. Some of us are fortunate to say we were born in December, so this is the time to actually sit down and start writing your plans for next year. You know that the schools are going to open. You know there will be Easter. You know June is coming. All of these things are there. So make sure that you're planning the factors, all of those, the holiday, the kids' holidays, all of those should go into the consistency of planning for those things, but attaching the budget to those. So if you have plans to, for instance, lose weight, you can't just have Makgale as part of your expenses, right? So you need to say, these are the plans that I have in motion, and therefore my budget team will follow those plans so that you don't then get into a space where you become impulsive. Consistency and prudent saving and spending is the way to go.
If you're going on a big shopping day, and there are days of the year when you're still going to do that, even in this era, yes, Black Friday may have come and gone, but there's still days where you're going to, do things. You might be doing it as a family or whatever. Is there a difference? I mean, you can do that with sort of planning, clear and intentionally, because you're going to walk past things that you're going to see and you're going to want to buy. So how do you avoid that kind of impulse buying?
I think it goes along with the discipline that you teach yourself, right? Yes, of course, there'll be temptations. Of course, I'm not going to be naive to say you might not be tempted. The question is just to remind yourself what your goals are, what you've set yourself in terms of your finances, what do they look like, and what are your plans in terms of the future, and constantly force yourself to remind. It's not a natural, and it sounds very counterintuitive that you will be walking into a mall and you're pricing all these nice things and you're pretending like they don't exist. At least teach yourself the discipline of saying, do I absolutely need this and do I need it now? Or is it something that can wait and there's something better perhaps in the future that I could get? So yes, there will be temptations, to not be mistaken. And yes, we have clever marketers in South Africa. But it's upon us, right, to instill the discipline in ourselves, to hold ourselves back, to pause and reflect.
Thabo, we've had a voice note in asking for a little bit of advice. Let's hear that voice note.
Good evening, Stephen. This might be unrelated. However, Mr. Warren once gave us advice. We were talking about how to improve your credit score, and he mentioned something about getting a money account or something that looks like a credit card, but you put your money in it. I've looked all the banks. Nobody has that. Does your guest have any advice on how you can go about improving? Because if you apply for a credit card, you get declined because your credit's not good. Hector Midland.
All right, thank you. It's a great question. Thabo, I don't know if you have any thoughts on that. I mean, basically, what we want to do here is save ahead.
Ideally save ahead, but I think your listener is talking to rebuilding the credit score, right? As he said, you're trying to apply for a credit card, but so start small. One, wipe out whatever debt you have, right? work on improving your existing credit situation. But for those that are not yet there, start small, but take up the debt that you can afford. And even the debt that you can afford, link it to specific goals. So don't just take the debt for the sake of taking on credit. If somebody comes to you and say, hey, Stephen, you qualify for R1 million, but your goal is 100,000 rand, you don't have to take R1 million. Stick to what you can afford. So rebuild, start small. I'm not aware of the product that he's talking about, but in terms of rebuilding the credit score, start small, be patient with yourself. Do not rush into anything. Debt can be your best friend, or it can be your worst enemy. So respect it, it will respect you back.
It's so interesting that there don't seem to be many products. I'll have to do a bit more research on this that help you save in that way. It's all about credit, isn't it? Very quickly, Thabo, we've got a minute left. I mean, if you've done no planning for the festive season, how would you sort of protect your financial future that you've been working over the last 11 months? What would your sort of final parting shot be?
I would say, we act surprised when we see the future date. It's almost like we don't know that there will be Black Friday next year. There will be Black Friday next year. All of those things will still come. So start now. Set your goals, and set your budget, and stick to your budget. Set at least some sort of saving. Automate, if you can, your savings. If you are able to just pull it out, put it there, forget about it. Start now. It's all about the behavior. It's all about being prudent. It's all about being consistent. But there's no better day to start saving like the period now. And especially now in the festive season, it's just about the discipline, Stephen.
Thabo, thank you so much. Thabo Holo is the program manager for Old Mutual Financial Education. Might be worthwhile just looking for the podcast for this later and sharing it with a friend or a relative who you might think might be prone to a little bit of December temptation.
The Money Show, Stephen Grootes, is brought to you by Absa CIB. Discover the latest trends shaping digital assets across Africa. Download the Absa Africa Digital Assets Insights 2025.
Well, U.S. markets looking up tonight. The Dow Jones is up 0.5%. The Nasdaq up 0.72. The S&P 500 up 0.34. Is expectations, of course, of more action on interest rates in the U.S. And it does look like tech spending is up. There'll be a lot more to come on the Money Show tomorrow. Mateo is in for me tomorrow. I am back with you on Thursday. I look forward to talking to you then. You can look forward to the Money Show tomorrow with Mateo. Good evening. It's 8:00.